Good morning, everyone. This is Alita Hoover with BB&T, now Truist Bank. This session is about good credit and what makes up your credit and all of that encompasses your credit. I have with me today Candace Burrell. She's the branch leader of the Stevens City and Strasburg branches. And together we bring to you about 25 years worth of banking experience. This is a recorded session. For those of you that weren't able to make it live, there will be an email with the PowerPoint presentation and recording sent out by Chris. Chris, I do want to thank you for having us here today. Also, in addition, our emails will be attached to that, so if you have any questions, concerns regarding the information, please feel free to reach out to us. With regards to your credit, I'm going to take you on a little bit of a journey today. I want you to picture yourself in the future, and you're making a big financial decision. Possibly your first car loan or renting an apartment. Maybe you're even buying your dream house. The lender or the landlord is going to have to pull your credit. Will you be approved? The lender, do you even know what's being reported about you? You may not realize it now, but your credit score will drive almost every financial decision that you and others make about you. Erin Lowry is a personal financial expert, author, blogger, and speaker. And she says that your credit report and credit score are the two most vital aspects of your financial health. For the past 17 years at BB&T, now Truist, I have been working in the Winchester, Shenandoah Valley community, and I've been a branch banker, meaning I open accounts and I help service the clients, to a branch leader like Candace. And now I am a financial wellness consultant, where every day is a field trip. I get to go and enjoy different aspects of our community, different walks of life, different jobs, different careers. But with all that, I bring financial wellness and what your journey looks like. It is my passion. It is everything that what gets me going every morning at work. My daily goal is to impact someone's financial journey with every encounter I have. With that said, establishing good credit, understanding how it impacts your financial future, the benefits it can provide, the importance of protecting and checking your credit report regularly is really what we're going to cover today. So let us begin with how it impacts your financial future. When you understand the components that a credit bureaus use to create a person's credit score, you allow yourself to have a better grasp on how it's going to impact your own future. So a little bit of reference material that we'll need to go throughout the rest of this conversation. Your credit score is a 3-digit number, and it ranges from 300 to 850. There are 3 major reporting facilities that people utilize in the lending and credit world. They are Equifax, TransUnion, and Experian. And the 5 components that make up your score are payment history, as you can see on the screen, amounts owed, the length of your credit history, your credit mix, and new credit. But with regards to that, the payment history is what lenders call your credit, how often you meet your credit repayments on time and per the arranged agreement. The amounts owed is what we call credit utilization. It's the total credit available to a person divided by what they currently owe. And the length of your history is just that. It is the average age of all of your credit lines. But the mix is a little bit different. It is, you have open or what we call revolving. That's like credit cards and lines of credit, sometimes known as home equity lines or secured lines. And those are reusable. As you use them and then pay them back, you can use them again. But then you have closed-in loans like your car, your house, possibly student loans. And once that money is used and paid back, it is not available for you to use again. You need to have a good mix of both. New credit is how often credit inquiries are made on your behalf to establish new accounts. So as you can see here with this chart, each one of these have a little bit of a different weight with regards to them. And as you can see, payment history is absolutely the heaviest weighted item on your credit report. So if nothing else from today, you must pay your bills on time. Candace and I both believe in budgeting, but more than that, I will eat peanut butter and jelly sandwiches and ramen noodles if I have to ensure that my bills are paid on time. I even set my financing up a little unique to ensure that money is always there for my bills. And if I have a what I call a want versus a need, that has to go into a separate account. That way, if the money's not there, I don't get to enjoy it. So with that said, it's a matter of understanding all of these components because it is a fine dance and you have to have the good mix. You can't just have a credit card or a car loan. It's a combination. And we do know that it takes a while within that realm to build up your actual credit file. So you could have a car loan and a credit card, but you're still going to have to make those payments on time for a couple of years for that file to mature. Someone who's new to credit, whether they're 18 or they're 40, have to go through that, what I call infant and toddler stage, and kind of walk and crawl before they run. With regards to, actually knowing about your credit, there's a really good article. I read the entire thing, but I only want to let you know a small portion of it from the New York Post. It was about the percentage of Americans that don't even know their credit score. And it was 13% have no idea basically what a credit score is, what their score is, or what impacts it. So it sounds like a small percentage, but if you think of the 13% of Americans, that is a huge number. And, as I said before, with regards to understanding and how it works and who can report for you, it's really about, it's your report. You have to really understand that you can protect it. As I said, it was 300 to 850. And as you can see, the difference in what people call the range from 300 to 580 poor, 580 to 670 fair, 670 to 740 good, then you have the very good at 740 to 800, and really, when I say exceptional, 800 to 850. I know that Candace and I don't see a ton of people at the 850 range. In fact, in 17 years, I've seen an 840, but I've never seen an 850. We typically see people from the 680s to the 760 range. So it's good to very good. And that's pretty typical. I can tell you I've never seen anyone at a 300 as well, though. Even someone just starting out, they typically are, the 500, 550 kind of range. So it's a matter of protecting it. You protect your information, and your credit bureau needs to be protected as well. And you get to decide who kind of runs it, who acquires it, and you control by what you do with your actions how good the information is that's reported. With regards to rates and how it benefits you, the people that can pull your credit are potential lenders, employers, landlords, insurers, utility companies. And I know with some of those seem very obvious, but they're not all obvious because a lot of people don't understand that, a car insurance company is going to pull your credit. Well, they do. And they do it annually after you become a client of theirs and as long as you're a client, because they feel that when you are less stressed, so financial stress is a real thing in America, and when it stresses you, there's other indications, and if you have better credit, then you are less stressed and you're more likely to be a better driver, so a better risk for the insurance company. Utility companies like your water and your sewer and your electric and even cell phone and cable pull your credit because they want to see if you have any established payment histories so they can see what type of client you're going to be and whether or not they're going to require you to put down a down payment and what size of down payment. With regards to reporting good and bad, like I said, anyone can report either for you. There are companies that are required to report regardless. So like banks, credit card companies, big lending institutions, the federal government for student loans, they report both good and bad. But there are some companies that only report the negative, and those are the ones like the insurers and the utility companies and the landlords, someone that you owe money to that you haven't made that payment. They want to make sure everybody knows that you haven't made it, but they also kind of hurt you because they don't make the good report. But that's not all lost by making those. Candace, on a regular basis, uses what we call non-traditional credit references to help people establish their credit at the bank by possibly getting a car loan or a credit card. And those can be used by someone writing a notarized letter, like your insurance company, your landlord, that you are making your payments on time. But the caveat to that is it has to be in your name. It can't be in a parent's name. So you can't be a child on a parent's cell phone or a child on a parent's insurance bill. It must be in your name to be able to utilize as non-traditional credit. So when credit isn't handled properly, it actually affects your personal life. It actually affects your personal health. In a newsletter posted earlier this year by about financial wellness and productivity, how are your employees affected? The report is a nationwide survey, and 59% of the respondents said that their personal finances were the #1 source of concern and were affecting them at work. The other familiar stressors that paled in comparison were my job at 15%, relationships at 12%, and their health at a mere 10%. They did further report that finances are a distraction at work and that has impacted their health in ways like high blood pressure, migraines, sleep apnea, and substance abuse. Now, with that understanding, let's talk about, the benefits of the good benefits of the credit. When speaking to that, I do need to explain that there are protections for you as a consumer. And according to bankrate.com, it's a website dedicated to financial literacy and helping consumers make better decisions. The Consumer Protection Report, otherwise known as the CCP, is a piece of federal legislation that has put into place consumer protections against lenders. It was passed in 1968. The law requires lenders to explain the actual cost of borrowing, the terms in a way that the borrower can understand. The CCP includes several important laws, including Truth in Lending, Fair Credit Report Act, and Fair Debt Collection. And I said all that to basically let you know that it's a regulation of fair reporting on your financial information, how it is obtained, and what is said on your report. So what will you get with a good credit score? A consumer will receive lower rates on auto and home loans and some credit cards. There are some credit card companies, however, that don't negotiate interest rates regardless of your credit score. So you could have someone with the average score of, 675, 700, and someone with a phenomenal score of 840, and they're going to pay the same rate. And those tend to be store credit cards. Things like Kohl's and Lowe's, Home Depot's, those big national chains. And typically the rate is higher than national average. You're going to be looking at something like 24%, 22%. National average for Visas, MasterCards across the board is currently about 17.5. But when you work with your own institution, typically those rates are going to be better because of the relationship that you have. It is the consumer's responsibility to educate themselves on the policies and procedures of the companies that they are doing business with or want to do business with, so that you understand what they are looking for or whether they do or do not negotiate credit. As for banks, good credit is actually a bargaining tool. Typically, the better credit you have, the lower the rate you're going to have on your loan. And history does show the majority of the time that when people establish good credit, they will do everything to maintain it. It's kind of like when I told you I would eat ramen noodles or I would eat macaroni and cheese. I'm going to do whatever it takes to maintain that credit score. Have you ever seen a payday loan, title loan company? Typically those bright colored buildings that say, drop off your title loan, we'll give you some cash, or, sign this note. Next time you get paid, you can pay it back. Well, typically the consumers that are using those have not established any credit, or they have low credit because they haven't, walked and fulfilled their credit file yet, haven't been within the credit history long enough, or they have what I like to call a bump in the road or a hurdle in the road, and they've had an event in their life that has caused their credit to go down. I will tell you the loan rates of these businesses range between 50 to 300%. And it's absolutely astonishing. They can't hide that rate. They have to disclose it. That's part of those regulations that I talked about earlier. But they do it in a way that it's very hidden. It's very glossed over. These are legal businesses. I like to call them legal loan sharks. and I try to advise everyone to stay away from them. Do anything and everything in your power to stay away from them. Good credit will make it easier when you want to rent an apartment or, like I said, obtain auto insurance. Another great benefit is having the smaller or no down payment security payments. When you have good credit, it is a buyer's market. You are not at the mercy of whether someone wants to do business with you. Most of the time when they are asking for your business, they're seeking it out. Now that we've built our great credit score, let's make sure we can maintain it and protect it. Good credit is maintained by checking your credit regularly. It is the financial advisors, people like Candace and myself, us bankers, we stress the importance of checking it annually. It's a small exercise to ensure that it's heading in the proper direction, ensure that you don't have any incorrect information, misrepresented information, or fraudulent activity in your name. Humans input the reports. They get information from the bank, they input it into your file. They are human. They're going to make mistakes. It's not always intended to be, fraudulent. It's not always tended to be misrepresented. But that's why you have to check. I just recently checked mine in August, and I was married to someone that I'm not married to. It was an easy fix. It was an easy correct. Sometimes things get mixed up in billing offices, so you get reported as not paying a bill. That's why it's so important to have proof that you paid it. So then if that has happened, you can have that removed from your credit report. And this can easily be done, pulling these reports at annualcreditreport.com. There are other businesses out there at the consumer's disposal that you can request information from, like Credit Karma, Credit Sesame, NerdWallet. Even BB&T offers your credit score on our online banking. Those businesses that I mentioned, it's a soft hit. It's not, what's the word I'm looking for, Candace? It is a
inquiry.
the inquiry, but it's not as in-depth. It won't give you the background information, but it's also not 100% accurate compared to the numbers that you're going to get on the annual credit report from the actual agencies themselves. I have seen them be off as little as 5-10 points and as much as 75 points because of the type of inquiry it is. Plus, there are different components. When you buy a home, that is the most in-depth credit report there is, so it's the most scrutinized, and the numbers are a little different than when you are getting a credit card or a car loan because of what's looked at. Every financial advisor suggests you do this, and not only can you go to the website, there's an 800 number if you'd rather not do it online, and that will be in the PowerPoint as well. But once you're on this site, when you check all three reports, you can file any necessary disputes, you can report inaccuracies, you can protect your credit, i.e. if something has happened, some fraud, you can place a freeze. And there's additional learning resources on there as well. There are some PowerPoint presentations, there's some PDFs for you to read. I did even find a video when I was on annualcreditreport.com. And they make it very simple to fix any inaccuracies. It's a click of a button, you explain the situation. Depending on what it is, you might have to upload a document, but it is very simple. Your credit report includes a ton of private information. Your name, and when I say your name, it could be many variations. I am Alita K. Hoover, actually Alita Catherine Hoover, but some people put the K in, some do not. Some people have, in the opportunity to file for new credit, misspelled my name. So now that is on my credit report. If you're a junior or a third or a first, those can be on there. So I highly suggest you actually use your full given name. That way the information is more accurate. Candace and I have both seen people within the bank that are juniors and seniors and firsts and seconds, and they don't use any of those suffixes. So therefore, there has been, information that has gone across the lines between those family members with regards to credit reporting. By law, you get this report free once a year unless you've been declared declined for service where your credit report and score were the reason for denial. The company does have to tell you which company they use to pull your report, so therefore you can get a statement. I do suggest you be, aware of who's pulling your credit, know who you've applied for, remember who you've applied for. Don't necessarily allow every business in the mall that offers you a 10% discount, to pull your credit. If you're at home and you're getting all those pre-approvals, I don't know about anyone else, but I think I shred 25 a week. I'm the amount of money that is spent in postal service, for sending pre-approvals and this loan and that loan is absolutely outrageous. But more than that, if I get a denial in the mail and I didn't apply for credit, that is a red flag. Or if I get an actual credit card and it's not a pre-approval, it's actually a bona fide credit card, that is a huge red flag, especially if I didn't apply. That's when you must go and do something about your, review your credit report, put a freeze on it, put an alert on it. Fraud doesn't always happen in the form of a new account, though. Sometimes it's a matter of mirroring an existing account, and information is hacked in a number of ways, whether it's a breach at a data center, a breach at a health insurance company, because who else has a ton of your information? Banks and insurance companies. But it could be a matter of someone stealing your wallet or someone getting the information and mirroring it out of your wallet. So just be very mindful of what's going on, because fraud and identity theft are leading the way in crimes against people. So when I talk about this personal information, each credit report looks a hair different. We tend to, at BB&T, use Equifax a lot. Like Candace, that's the report that she pulls on a regular basis for her loans. But when you get a mortgage, it is Equifax. It's all three of them, and each report's going to look a little different. I do have a sample report of Experian. Unfortunately, Equifax and TransUnion have both removed their sample credit reports from online that I could obtain for this seminar. But keep it safe. If you download it from the website or you have them mail it to you, just keep it with your safe documents because of the amount of information that is on it. We're discussing a very important part of your personal financial journey. Our goal is to inform you so when you start that journey, you're stepping out on the right foot and you have the tools in your toolbox to be able to negotiate, good loan rates, low deposits, and understand that it is a tool that you will use your entire life. It's something that you start out and you build up in your younger years, and then you kind of maintain it when you're like Candace and I. And then even though into retirement, you may not have some of those large payments any longer, you still have to maintain your credit and use it. And that's the unique thing about credit. You have to use it to have it and to maintain it. Candace can chime in here where we've seen people have great credit scores, they retire and they pay everything off and they're no longer using it. And it doesn't turn bad, it just kind of goes away. You want to speak to that for a second, Candace?
Yeah, actually, thanks, Alita. I just had a client not too long ago who, she said, I have immaculate credit and they turned me down for a loan. And we talked a little bit further and I said, well, when's the last time you've actually applied for a credit card or an auto loan or whatever it may be? And she said, oh my goodness, I'm debt free. I haven't had a loan in 5 years. And she's like, I love it. And that's true. It's great to be debt free. But as Alita's saying, if there's nothing else reporting, we have nothing to measure. Has your finances changed? Have you changed in how you're handling your funds? So keeping it open and active, even if it's a credit card that you use on a daily basis and pay it off in full, keeping something going to your credit reporting is huge.
Yeah. So, and with that said, I mean, I laugh because I use my family as so many examples when I do this day-to-day life, but my son is very young in what we call in his credit file. And he had a loan and he paid on it for the 3 years of the term of the loan, but it's now paid off. So I had to really try to explain to him that it's there and it shows that you did good and you never had a late payment, but it's no longer reporting good for you. It's just there, it's history. So you have to keep things going. And like Kendra said, I had a client like that as well who needed to do prescriptions by mail per his Medicare, and he didn't have a credit card. So he applied at the bank and we declined him. But it's because he is debt free and paid everything off, and his credit didn't go bad, it just disappeared. It just kind of like right off the end of the scale. So you have to keep it going. I am going to back up to a slide. This is really where I want Candace to chime in, because when the credit score starts to fall, or as you're gaining that hill and getting to that plateau of where you have good credit, there's a difference in interest rates. And I really want her to dive into that and show the difference in what people can pay. Please understand, these rates are not current rates. These are just something that, just an example. Thank you.
Right. They're an example, but it's real life, and it really does impact, your credit based off of, what the rate is that you're given. In this particular example, Lucy, Tony, and Joe, they're all looking at buying a $6,000 used car with a $500 down payment, a loan for 5 years. So those are some different criteria that your lender will ask you when you're looking to purchase a vehicle, the term and finding out the down payment and all of that. So that's pretty standard, cut and dry across the board. But look at Lucy. Lucy, she has a credit score of 800 to 850, which is excellent. The lowest rate on a used car is at 4.2%. So the interest that she'll pay over those 5 years is going to be about $607. Tony, his credit score is still good. I mean, 700 to 749, that's good. The rate on that, did it increase? Yeah, it went up, it doubled. He's now going to end up paying roughly $1,200 in interest. But then we have Joe. So Joe, his credit is fair. It's 550 to 600. His rate is 15%. So if you look at Joe compared to Lucy and the credit score, it's 4 times. Joe's going to pay 4 times in interest what Lucy will pay, and that's just a matter of the credit score itself. The term's still the same, the loan amount's the same, the down payment's the same, but the decisioning factor there was the credit score itself. So your credit tells a big part about who you are and how you're managing your finances, and lenders look at that. That's one of the first things that we dive into when you're coming in to borrow.
It is. Thank you, Candace. And credit, or what I want to call a loan, it's risk-based. What kind of risk does the bank or lending institution, credit union, see you as? And as I explained when we were talking about the components, your character is just that. It's how you pay your bills. If we go back to this one, the payment history shows your willingness to repay your promissory notes, what you've said I will do. Super important. The 30% amount owed in the credit utilization, there is a formula to that. They really don't want you to go more than 35% of what is available to you. So if you have $100,000 in available credit between credit cards and lines of credit, you can't go over 35,000. And that's a lot of money available to you, and a money that you could potentially spend. That's a car, but you have to, no different than though if you have $1,000 available to you, you can't go over the 350. It's not that you can't, it's an average. Understand when your credit is pulled, when you see that report, it's a snapshot. It's your chance to paint a beautiful picture for a lender on your background and what is available to you. So all loans have a little bit different pricing The lowest loans are going to be a home because that's where someone lays their head and they're going to do everything in their power to pay that bill. The next is car loans because you've got to get to work. Now, we've been graced with 2 feet and there's public transportation, but we all know that, nothing like having your own car and the window down and being able to play your music. But then from there, it all can drastically increase. So although someone might have good credit, depending on what they're buying, the rate still could be increased because it's probably going to be the first thing you don't pay if something happens, if you don't have the money, if there's an emergency. So we're talking about like motorcycles and boats and things like that, what we call recreational lending. So it's just really a matter of understanding this pie chart, dancing the dance just in a perfect way to have that score. But more than that, understand that when we talk about the scale, don't get fixated on that 850. The good to very good to exceptional, that is the typical range. And you have to get there. We don't start a race at full load sprinting. We have to get up to speed. I like to say, I'm a speed skater and I'm a distance speed skater. I'm not a sprinter by any means. I'm like a big old car. Takes me a while to get started, but then once I'm up to full speed, I'm good to go for hours and days. And that's how your credit is. You start out as a toddler, you start out as an infant, and you build that up with a different mix. And that might include if you have a parent that's willing to co-sign on a small credit card for you, or a parent that's willing to co-sign on a car loan. But sometimes parents really want you to figure it out yourself. And so therefore, there are ways to do that. There is secured credit. And when we mean by secured credit, we mean not a car loan secured, but more of a savings account secured. And that happens to be the way a lot of people get their first step into the financial journey and onto their credit bureau. And if Candace, if you would go into what secured credit looks like and what deferred items on a credit report look like and how that impacts decisions.
Sure. So secured credit card we probably do 3 or 4 a week here at my office. Like Alita said, not everyone has mom, dad, grandparents, someone that they can co-borrow with to get their credit going. But I would say a good amount of children have savings or students have savings that they have worked towards. And that's ideally the best way to get your credit going if you don't have someone that you can borrow with, is the savings secured credit card. So what that would look like, let's say you've had a piggy bank fund, you've been putting, or mom and dad, someone has been putting money in it as you've grown, and you've got $2,000 in it. But you are looking to get a $1,000 credit card. What we could do is take that $1,000 out of your savings and put it into a separate savings and secure it as collateral, and you would borrow against that money. That doesn't mean that that money is sitting there to be able to pay that card. It is if you default and you don't make your payments, then we would absolutely use that money to make the payments for you. But that's not good. That's not the goal here. The goal would be for you to make some payments, preferably more than the minimum, and get that paid off. And typically, I would say 6 months to a year with utilizing the credit card, using it, paying it off, using it, paying it off, keeping that total credit exposure, that 30% in the back of your mind, not always having it maxed out. That's not good. After about 6 months to a year, you could apply again for a traditional card. And if you've done everything that we have coached you to, as far as making the payments on time, not having it maxed out, more likely you're going to have that credit card approved. At that point, we would release the savings that you had of $1,000, and that's just an example. It can go as low as $400 and all the way up to $10,000. But we would release that money back to you, and then you would have just the traditional credit card. your money's back, you've paid everything on time, now you've gotten your credit established. Then the next step would be looking at a traditional loan, an installment loan, whether it be, a car or an unsecured loan for a down payment for your rent or whatever it may be. But the secured card is definitely a good starting point to get your credit going.
Very
Alita, you
good.
were wanting me to discuss something?
Yes. So some people get their credit file established via student loans. And that's the first thing that hits their file. And I am all for it. I have one. I'm currently back in school again. And it's a great way to start your file. But lenders like Candace can see that it's a student loan. They can see that it's deferred. And it's not that that's a bad thing. It's just that when making credit decisions, we know that you haven't taken those steps to repay obligations because it's deferred while you're in school. So just be mindful of that student loans can't be the only thing on your credit file until you get out of school.
And
I would
start
highly
working
suggest,
on them. Yeah.
right. Because we can tell. Now, if you were to walk into an institution and ask for a loan and they see those student loans, they're going to put into, remember I talked about credit utilization, there's also a formula called debt to income. So they're going to put a mock payment and figure up, this is how much you make, this is how much you owe, because at any given moment, those loans could be activated and they start requesting payment because we don't know when you will leave school or when you'll graduate and those kind of things. So we have to ensure that there's enough funds there. But it's another good way to start your file, but we can see that it's deferred. So at this point, we've really covered everything that I was on my agenda. I don't know if there's something that Chris would like to chime in on and maybe something he sees with the students at Lord Fairfax, but I do want to say one more quote. And this young man, his name is Tyler Gregory, and he works for a business out of Texas. And literally, he's in the business to help people remove inaccurate, unverified, or legally unauthorized information from people's credit files. So that's all he does. He's not there to coach you on a better credit score. He's there to help you get things that have been inaccurately reported. Remember those federal regulations. There's only certain things that can be done. But he says, if you don't take care of your credit won't take care of you, which makes perfect sense because they go hand in hand. If you're paying your bills on time, you've lived within a budget, you're doing, those financial responsibilities, you're going to feel better. You're going to have a lower stress level. I'm not going to tell you there's never any worries in life. I mean, it is called life. But if we can help you walk out on this journey on the right foot with a good tool bag with regards to your finances, I can tell you that it is satisfying to know that you're able to do this. It's satisfying to know that you're able to fulfill your requirements and agreed upon items. But more than that, you'll be able to go much further in life with regards to your finances and do other things. Chris, do you have anything for the group or for the presentation that you'd like to add or ask?
I just want to say thank you to both of you. I'm going to share this recording with our SDV instructors because we have a whole section on financial management and how to manage your life. So I think this is really going to be helpful for them. I mean, I think it's amazing. I wish students would show up, but I do appreciate you all recording it. So I'm going to make sure that at least some students are seeing it.
Without a doubt. And I'm not going to lie to you, and I don't mind this being on the recording. I'm kind of like the old cartoon Pinky and the Brain, where Brain wants to take over the world. And my Pinkies of this world are the Candaces. They're the ones that get me out of trouble. But this would be, if I could say I have one goal, this would be my goal, is to, in my area, to teach these kind of classes, kind of like an orientation class at Lord Fairfax or any other community college or university, and then to graduating seniors from high school so they have the proper tools. I am 48 years old and I wasn't It's not that my parents didn't give me the proper tools, it's the way they educated me. They thought I was watching through osmosis, and teenagers don't pay attention to that kind of stuff. So I didn't really learn until I got into the financial world about some of the decisions and how it impacts my life. And I don't want people to have to wait until they're out of school or wait until they're in the workforce because they go to a trade school or they go right out of school and into the military or into another, career. I want them to have it right away.
Right, right.
So.
And the goal too is to get it going before you need it, because once you need it, at that point I won't say it's too late, but it could be the make it or break it for some. So definitely get that, hit the ground running.
Yes, and it takes 18 days to form a good or bad habit, and that's when it's a habit that you do every day. If paying your bills is a once a month thing, it's going to take 18 months to really form that good habit of ensuring you're sitting down and taking care of everything all at one time, or you have a procedure, that you're going through. So the one thing that I leave everybody with is the fact that regardless of where you are in your credit journey, in your financial journey, there are times that the stress will weigh you and the light at the end of the tunnel seems out. I will tell you it's never out. It's just dim. And when you can ask for help, when you can sit down with an advisor, and that is something BB&T does for all people in our community, regardless if you're a client or not. We will sit down with you and really explore your financial journey, ask you questions, engage you, and give you information with regards to things that we think that you should take steps towards, and we'll help you take those steps if you need help. We'll make suggestions, because that's what we want. We want our communities to be a better place to live and grow and be fulfilled, and we do that through financial education. The last item I'm going to share is some additional resources, and this will be live links when you receive this, Chris. The first one is a student portal, and it talks more about checking accounts and savings accounts and what is offered for students. The second link is actually our Financial Foundations, which is a portal with additional learning. And if you give me just one moment, I'll bring it up. The QR code at the bottom is to that same student portal. And so whether someone wants to use their smartphone and scan it, or they wants to use the live link, and I apologize that it is taking a moment to come up. No, it's not working. Okay, it doesn't want to play nice, but I promise the link works. I just checked it this morning. But it takes you into a beautiful site that has about 25 or 30 different topics with regards to financial wellness, ranging from basic checking and savings and all the way through investment, retirement, Social Security, and everything in the middle. They're short and sweet and to the point, and I highly suggest you check those out. I do appreciate your time. Chris, again, thank you so much for inviting us, and I look forward to our next session.
Thank you.
Thank you.